All right, we're back for another one, Chris. How's it going, man? Good to have you back.
Thanks. Opening bell. Let's get cracking. So I'm looking at a couple of things. What do you look at today, Nick?
Well, the producer price index came in a little better than expected,
hmm
lower than expected, and I was making the point for, well, TLT still, I'm still liking it. I'm liking TLT. That's my one thing I can kind of hold on to this week. If I mentioned yesterday that if it breaks out, I may look to sell covered calls if we get a nice push. But currently, TLT, liking the yields drop here this morning, and the stock market again is very very strong right now. But you're just going to need to see what do you get this, what do you have to see to get this market to pump higher than that, right? It's already made such a big move for
Yeah.
this to really explode further. I don't even know what the market could present. So to me, I am bullish on the indices. If we get a pullback, I'm setting up for long trades again. But currently indices just look really really strong. You've got metals. I was talking at length before you joined us here, Chris. This silver chart looks so pretty. It just
hmm
almost looks too good to be true.
So pretty.
It looks so good. I don't know.
uh,
What do you think silver rounds out here? What do you think?
I think silver looks better than gold. It doesn't have nearly the kind of toppy look that gold does.
Hmm.
I'd love to see that support level hold. So a couple things. I was looking at getting long on silver futures. I'm just looking at short-term stuff today. Thursdays are typically directional days, but we do have, we have a little bit of a gap here from the PPI data. We have a huge gap from CPI. You would ask, what does it take to get this market to go higher? I mean, we've already gone over $12 for the week. And
Yep.
that was great to take some profit this week on some of my, reverse iron condors. Um, and we had this kind of floating indecision candle from yesterday, despite it being a huge day up. Is like everyone saw green, but we saw, basically an indecision candle at an island. So,
Sure.
I mean, going from let's go to the weekly chart here. Going from the low to the high, I think it's just over $12 and change. So the low at 532.05 to the high since yesterday 544. So $12 and about 7 cents movement. The average move is 12.30. So I'm actually interested, and this is more short term, but I'm interested. I put a trade in this morning. It didn't get filled because I need price to go up just a little bit higher. But I'm trying to fade a SPX trade at 5,500 just through Monday. So if I can get, let's say today is pseudo directional, good, bad, indifferent, I don't really know. But if the market just keeps plugging away and going higher, I'm going to try to get filled on a broken wing butterfly, which means this is my exact pin price, which I can make about 10x profit. I'm basically trying to collect the dollar credit. If I can turn that into $1,000, that's because it closes at 5,500 by the end of the day Friday, which that's great. Otherwise, I just want to get filled on the credit and have this thing fade off of that. That would be, if we stretch to 5,500, that'd be close to, let's see what this is percentage wise. If we went up another, that'd be another 1.2%. If we did that to the SPY, what's another 1.2% price wise on the SPY? It's probably around that high 1.2%. Man, that's going to be over 550, I think, or close to it. 1.2% puts me at around 549. So
Okay.
I'm looking to fade that. That would be, I mean, that's a $17 move on the week. We don't see that very often, man. I mean, I think the last time we had a move that big would have been like October of last year when everything was coming out swinging with some bullishness. So this is the large market cap melt up, dude. I don't know what else to say. You look at sectors. I looked at this this morning. This one, I mean, we talked about the Russell yesterday. This Russell, the top 200 instead of the 2000. So the IWX, and I know is it IWG? Is that the growth one?
Yeah,
What's
IWF I think is growth.
IWF? Yeah,
Yep.
that's right. Okay, so IWF, it's overbought, it's divergent, but you can see the prices is way more bullish on this one.
What a
The
difference, Chris. IWF and
IWX,
IWM. My goodness. Growth is
so
just
different, right? So different.
wow.
And even
Yeah.
even the IWX, which is the top 200 value plays. I mean, there are, just like with the concentration in the S&P, there's concentration in the Russell that are performing well, but it's on the hands of very few. It's like that's the top 10% of the Russell is performing well. Well, is that a
Sure.
surprise? Not really. It's like that's why they're indexes. That's why they're, you buy the haystack, and what performs best can help raise everything else as far as price wise. But it's crazy how different they look, and I see this as a good topping opportunity to maybe look at a short. I don't think I'm going to get the premium that I want, though. If I want to short IWX, I'll look at it right now. I doubt it's going to be good. So if I
Yeah.
shorted IWX, I would look out to probably this July expiration. I mean, I don't even get bid prices on the calls right now. That sucks.
Yeah.
So I don't
Yeah.
know what to do with it other than nothing. It's like the option trades would be pretty garbage. I mean, it's the IV rank is high, but if I can't get a fill on this, I don't know. I don't.
Yeah, it's tricky. I mean, you're talking about a VIX at 12 today, Chris. I mean, that is
Yeah.
it's been there for a while, but we just keep getting teased with the VIX. It pops up, gives you something to work with here, and then before I can really jump in on anything, it is back down. I think there's an environment where you just want to be selling all the time, and there's
I know.
times where you just want to be just cash heavy and wait, and that's so hard to do for Chris. We're in the same business. You manage money on behalf of others, but I'm still managing money. We both manage our own personal funds as well. It's hard to sometimes just be like, I need to stay liquid. That's such a hard thing to do, because you want to see it, you want to deploy capital. That's what we've been put here to do in our roles. Sometimes it's hard to do. I don't know, what are your thoughts on sometimes trying to build cash? I know one of my friends who is an NVIDIA monster. He's got like just ginormous gains on NVIDIA. He's been so right about it. Was buying it all 2022. He makes the point that he's just been slowly, gradually chipping away at his NVIDIA position and just building cash. And I think that it's a very modest thing to do, especially, I mean, the luxury of having to build cash from an NVIDIA trade like that. I mean, good for him. But what are your thoughts on cash building over time?
Cash building, having cash. I mean, I like the idea. Like, the way that I typically manage is having leverage in a market. I'm like, when I was managing a forex fund, forex provides a ton of leverage for traders, and I would only have maybe 10 to 20% tied up in margin. I had so much dry powder, so much margin at the ready for forex trading, because I traded big time frames. I traded like weekly, monthly charts and big patterns and big areas. And so I'm looking for 500 pip moves or 1,000 pip moves, and I'd sit on these trades for months and then see them hit profit levels. But if I was all in, I couldn't afford to take any major swings. And with forex trading, if you over leverage or over margin, they just close your positions,
Right.
and they force you to stay above or stay below a certain margin threshold. So in trading stocks and options, trading futures, I look at it the same way. I mean, I'm roughly about 50 to 60% invested, so I have cash on the sidelines to deploy. And right now, I think that, I mean, where do I want to deploy? I want to deploy on dips. I want to deploy when, I mean, if we're talking the SPY, right now, I don't want to deploy another 30, 40% cash at all-time highs. I want to deploy when the market has a little bit of a freak out and it dips 3, 4, 5, 10%. And maybe I don't get it. I think that's the hardest thing is, we technically we'd like to see a correction. We'd like to see a correction, but maybe we don't get it. And the crappy part about that is that cash on the sidelines. Here's what I do with it. I typically put it in to like a treasury type note. I mean, it's on. So in Tasty, it's GOV.
Yep.
So you can put it in, and it basically sits at a risk-free rate, and it's unallocated cash that can collect that 4.5 to 5% kind of dividend. But you can instantly pull it out. You can borrow against it. So I mean, there's all sorts of ways to use it to your advantage. But that's like allocated for unallocated. Does that make sense?
Right. Yeah. I
do something with it
in the
but
meantime.
I want to use it. It's like just have it sitting there, not collecting anything on it is certainly a waste.
Right.
But it's like same type of thing. If I have, so I trade a lot of cash accounts. I trade probably a mix of margin and cash accounts. So IRAs and retirement accounts. I don't have the luxury of just sitting on a ton of extra buying power. Like what cash I have, that's the cash I can deploy. So I mean, when we're sitting at all-time highs and it feels a little top heavy, a little long in the tooth, a little too concentrated, I'd rather see a bit of a pullback or a cleanse before I start redeploying or repositioning. And look, I'll just go through the symbols here. I mean, I have a lot of positions still, but I've been slowly, slowly raising cash. I mean, I don't mind a cash position, but what I've been slowly doing is concentrating the portfolio, taking less trades and getting this from 100 plus positions to maybe 30 to 40, and I'd like it to be like 20 or less. I mean, I certainly don't want it to be like this. I like being diversified, but I can be diversified in different ways. I mean, now as a trader, you can be diversified in just sector trading,
Right.
sector ETFs. You can be
That's what I
diversified
do
in all these
too.
different
Yeah.
indexes. So it's very easy to be diversified and have a low correlation to the overall broad market.
Yep. Exactly.
So a
Exactly.
lot of
Chris,
positions. Yeah.
I'm gonna have to leave you here, but I'm gonna
Okay.
let you take over the show. I gotta hop off, but to everybody who's listening, I'm just gonna leave the show with Chris. Chris is he's got like a few months of experience, so you guys are in good hands here.
I
I'm
just
kidding.
started trading. I
He
just
just
started.
started
I'm brand
trading.
new.
Yeah, but
I'm brand
anyway,
new.
all right, stick around. We'll listen to the beginner trader here. Just kidding. But Chris has got tons of experience. He's got his own YouTube channel. We'll drop the link here in the chat. Make sure to subscribe to Chris if you're watching on YouTube. And if you're on Twitter right now, at Real Chris Pulver, you can follow him for his insights and stuff like that. So, Chris, you got the show for a little bit. Thanks for guest hosting.
Of course. Thanks, Nick.
All right, man. See ya.
All right. Take care. All right, everybody. I did a quick rundown. I just finished up a live session with my traders in my Flex trading room. I did a quick rundown on some currencies. I'm still in the same currencies. The charts, the analysis hasn't really changed that much. But I'll just kind of give you my faves. I still like Aussie CAD long. I am long. I have been long in Aussie CAD since this equal low. I've been long in this trend line break. I was long on some pullbacks. So I am staying long. This was a nice little double bottom play, and I'm trying to take it back to this high. So I bought in here. We also had a trend line break. I bought in here. I bought in on the retest of that level. Bought in here. Bought in here. So this is what I do. I take big positions. I take big structure, and I build 3, 4, 5 trades in. Maybe sometimes if I really like it, like in this year's trading, I'm in a lot of Swiss pairs that are probably 8 to 10 entries and going well, and I'm collecting some swap, and I've got some pips. So anyway, right now I'm showing some good profit on the Aussie CAD, New Zealand CAD combination. I'm bullish on both of those, and my target is I'm going after 94.50 to 9,500. So I'm going to stay long in this one. Any dips, any pullbacks, I still like the currency pair. This doesn't stop me on a pullback. If this thing wants to, go up and then pull back and then go up and then pull back and then go up and then go. If it's going to be slow, fine. I'll wait for trend line. Wait for trend line. Wait for trend line. But that's going to be my price target. So I will stay in this trade, committed to this trade until we get to 9,400, 94.50, start to protect. Ideally by 95, we tap that level, I'm out and I'm done. And that will probably, I think I did the math yesterday on this trade. I'm sitting on 1,000 pips of profit right now, and I'm holding it. So between the trades that I have or any additional trades, maybe I can flip this for maybe 1,500 pips to 2,000 pips of profit when it's all said and done, and that'll be a nice little chunk and a nice little cash injection. So that trade is looking great. New Zealand CAD, same thing. We didn't come down to the same lows, but you can see just some good price action here. So this low all the way back to this high, and truthfully, this New Zealand CAD could be a much bigger trade to the upside if we break this level. If this is a low and a high. So target one is going to be this previous high right around 8,800, but I could look at a symmetry move, low to high. And let me just use a box here. This is pretty easy to mention this. Anything on, so Jackie or anyone asking me about, I'll make this really simple. It's 9:43 a.m. Eastern time. If you're asking me about the yen pairs, no trades right now. There's a BOJ policy rate decision overnight, economic projections, reports, blah, blah, blah. I hate the yen crosses. It's so much manipulation, intervention. The BOJ is going to make it very difficult to, have a good, clean trade on the Japanese yen pairs, in my opinion. I'm staying out of the yen crosses. Dollar crosses too. Nick and I talked about it yesterday. I don't have a good direction on the dollar. I do not like the dollar right now because it's confusing to read. I am long dollar Swiss. I'm long dollar CAD. I've been beat up and chopped around on Aussie dollar, Euro dollar, pound dollar a couple of times this year that I've taken very small losses, but I don't have a good vibe on where the dollar is going to go. We got to get below 103.90 or we got to get above 105.60. That's the DXY. If that doesn't happen, there's no trade in the dollar unless you want to jump into a little tiny range and scalp it. It's not my style. Okay. So just putting a little blanket analysis out there. I don't like the dollar. I don't like the yens. I'm trading Aussie CAD, New Zealand CAD, and all the Swiss pairs. Those are my best trades right now, and they're working out just fine. New Zealand CAD. So a couple things I want to look at. This could be, I'm long in New Zealand CAD. I was actually scaling into this one at fib levels. So we have this low, we have this high. I started buying in at the 382, the 50, the 618 pullback zone. It's great. I looked at this for a potential. Okay, so we have a low high. You look at your fib zone somewhere in here. And then we have the right side of the trend line. We're starting to break out again, make higher highs, higher lows. All this looks pretty good. So I'm long to target one, which is 8,800. But what gets me a little bit more excited, and hopefully this is the case, is we don't just stop there. Hopefully we go from a low to a high, and we actually have a measured move towards a symmetry spot. So that would be a symmetry move around 91.29, which is very close to this previous high that we saw back in 2019 as well as 2021, right around that 92.50 handle. So symmetry is just shy of that. I think that's a safe trade if you want to go after a slightly more aggressive. There's target one at this high, and then target two would be my symmetry. So I'm long, and again, it depends on where the dollar amount adds up to be. But for me, I have trades where it hits my profit target, or I have trades that become good enough. And if I hit target one and I'm sitting on 1,000 plus pips or 1,500 pips of profit, it's good enough. I'll take the profit. And I'll go find another trade. Okay. All right. So that's my New Zealand CAD, Aussie CAD. I like both of those trades. Let me go through the run here. So Aussie Swiss. We've had a pullback, but this is my outlook, kind of equal lows, lots and lots of support off the flash crash low from 2020. I'm looking for this thing to two things: have positive swap and also move up. So this to me is a double whammy. This doesn't happen very often. I've only had maybe 3 times in the last 15 years of trading Forex, 3 times where I've really focused my strategy on positive swap. And if you get positive swap along with the technical upside that I'm looking at here for a buyer, that's a great trade. Doesn't happen very often, but there's a reason I'm super serious and pretty stubborn on these Swiss pairs, because I'm looking for this to make higher highs and higher lows. And even if this does, if it gets halfway, let's say that we have a close here from the flash crash, we have even a conservative support resistance zone around 68, 6,900. If I just look at the halfway point, somewhere in here, come back to 63, 6,400, I'd be thrilled. If my Aussie Swiss can get up to that level, I'll love it. Pretty simple, So if this is wave, let's say this is all carving out a wave one, pullback wave two, push wave three, pullback wave four, looking for a wave five, maybe it gets me up to 62, 63. I'll probably take some profit there, right? There's some good structure in there. There's a good pocket, 62, 6,300. I'd say that's a good enough. Okay. So I like Aussie Swiss a lot. Yen crosses, like I said, good luck. I hate them. Do what you want with them. I'm doing nothing. I don't like the yen pairs at all. I don't think it's fair to trade something as technical as Forex and yet not see a technical move, because you're seeing, central bank manipulation and all sorts of crazy liquidity games at hours that I never want to trade anyway. I don't want to trade at 9 p.m. to 2 a.m. I don't want to trade the Asia session, which is typically dull and silly, and it's doing stuff during rollovers and doing stuff in the dead zones, and it's just no fun. So I'm staying out of yen pairs for right now until, and this is a big if, but if we start to see this massive deleveraging like we saw back in late 2021, where we saw risk-off trading in equities and tech, we saw the dollar get stronger, we saw the yen have to basically manipulate its way out in 2022 for weakness into 2023. But if we start to see deleveraging and this carry trade that's been happening since 2022, if it unravels, unwinds, then yes, I will get back in the JPY bandwagon and start looking for some trades. But until then, I'm not doing anything outside of, I tell traders this: if you want to scalp the yen, scalp the yen. But I would focus on scalping the yen with a bullish bias, because until something changes with major policy from the BOJ, I would imagine it's going to focus on buy the dip, buy the dip, buy the dip. I'd rather be long the short, and if the market, doesn't respect this intervention high, so be it. And realistically, you have all these currency pairs in the yens that are floating at different prices. Right now, the barometer is kind of the dollar yen, right? The dollar yen could get up to these highs again, giving every other currency pair a chance to go up as well. But if the dollar yen is going to respond to resistance here, just be mindful of that. But if there's 100 some pips, what is this? We're at 157 up to 160. I mean, we have almost 300 pips worth of upside potential on just the dollar yen. If that basket is consistent and you get 250 to 300 pips elsewhere, so Aussie yen goes up, CAD yen goes up, Swiss yen goes up, Euro yen goes up, you could see a 250 to 300 pip move, and those pairs could be well above the intervention highs, right? So just take a look at these intervention highs. The Aussie yen is just sitting here like peppering that high. It can go higher, right? There's no reason for that to be the top. CAD yen, you can see there's a lot of room for this one to go higher. We can go back and find that top. Swiss yen is sitting at all-time highs once again. We broke the intervention high. Euro yen, we have not hit the all-time high or the intervention high. The pound yen has broken it a couple of times. We're still drifting higher. The New Zealand yen has broken it by a lot. So the dollar yen is kind of your gauge. Your other yen crosses, they kind of just do what they want to do. The New Zealand's been pretty strong. The Aussie's been pretty strong. They're both sitting there at the highs. The New Zealand has been better. You want to know, like, oh, that's weird. The New Zealand dollars or the New Zealand yen's higher, and the Aussie yen hasn't quite gotten there. Well, you can see that currency strength in the Aussie New Zealand. The New Zealand has been way stronger than the Aussie. Therefore, it makes sense that the New Zealand yen has breached those highs where the Aussie yen has not, right? So this is another currency pair that I really like. I'm out of the trade. We shorted it around 108.50, took the profit around 100 pips. And now we are looking for, I'm looking for something like this. Let's see. If we come back down to, ideally, I'd like to see price get to this level. Let me use a straight line. We get down to, this level or this level. I'm going to start dollar cost averaging in and building a position. Over the course of the last, it's been 10 years now on the Aussie yen or the Aussie New Zealand. It's been crazy. 2014-15, one of the biggest trades of my career. Ended up grabbing over $250,000 on that thing. Same thing over here. Had a nice run to the highs. Over here, had a nice run to the highs. This pair has paid me so well over the years that it's one of my favorites. I just wait very patiently to find a really good trade. So if this sets up to 104, if this gets to 104 or lower, I'm probably going to go 104, 103, 102, 101, start testing that level, and then start adding over here off of a big bounce at parity, 1.00, if we get there. And I'll trade it back to some type of equilibrium. 108 seems to be a really sticky level for this currency pair, maybe all the way back to 110 if we're lucky. But again, if we get an opportunity to buy extremely low, I love that trade. But again, it's not setting up and it's not there yet. So I'll just put it on the radar. Let's see here. Aussie dollar. This is what I'm talking about with dollar pairs. Okay, let's go to the DXY. Nick and I talked about this several times in the streams this week. If we're not above 105.60, if we're not above or not below 103.90, I have no trades on the dollar. Okay. Now look at yesterday's candle. Yesterday's candle, you can see, doesn't look nearly as convincing as it did when it was a full-on bear candle, right? We had this big bearish move, and then we finished about halfway, leaving a wick. Now, that's not a bullish candle by any stretch, but you can see how noisy this zone is. I don't think that the dollar is going to give us any good direction. And realistically, we might not get any direction on the dollar until after we get out of summer trading. Our summer trading on the dollar might be this. This might be the best you're going to get on the dollar crosses, which is chop. So if you want to trade chop, get in there and get your hands dirty. But I don't think we get anywhere above or below until probably September, October. And then we decide whether the market's going to make a risk on move, which would be dollar weaker, or risk off move, dollar strength. I don't know. But I will say this. We go sideways for a while. When we go sideways, that tends to follow with breakouts, right? So if we go sideways for the next couple of months and then eventually we break out, I will be watching for those breakouts and see if we have some good direction, because that is where Forex trading gets a little bit easier, right? We all of a sudden have a 200, 300 point move and we have 200 to 300 pips of direction in the dollar crosses. That is a lot easier to trade than trying to get here with, one day it's down, one day it's up, one day it's down, one day it's just nonsense. So don't get beat up by the dollar crosses because they're super, super messy. But my levels are clean. 105.60 to the bulls, 103.90 to the bears. I need to see a daily or weekly candle confirming. Otherwise, I'm staying the heck out of it. Okay, so that really kind of puts the kibosh on all the dollar crosses because they're just messy. I'm still long dollar Swiss, positive swap. I'm still long dollar CAD because it's a play on oil and it's a good pair from, I've been buying dollar CAD since 32.50. and we're seeing some good structure. I think 3,900, 3,950, 1.40 could be tested. And I also think that there's some interesting policy divergence happening between BOC and the US. And so this range, which has been pretty solid since 2022, one thing I think traders need to be careful of is if this breaks. So we go from this low, we've been making higher highs and higher lows. Yes. If this range breaks, and I'm not saying it's going to, but if it does break to the upside, guess what? We're talking about this dollar CAD going to 145. That is also a really good opportunity. Now, it's not there yet. It's not confirmed, but all I'm looking at is take a range, okay, and take that range and stack it on top. And there's your breakout. Gets right back up to these highs we saw back in 2020. That would have to be a close and a break, wide open. We've got to break above 1.40, right? And the flip side of that is, of course, if we don't break above 1.40 and we get to 139, 139.50, but we reject, okay, then we talk about the dollar CAD staying in this range once again. And this now goes on to a 2+ year range, and that's the trade. But if you take this sideways movement and you actually stack up a breakout, then you've got some pretty good direction and some trends that I would certainly want to be a part of. So there are some big trades out there that are in the mix, but they're just not ready, not confirming. So that is that. Let's go elsewhere. CAD Swiss, still like CAD Swiss long. I got to pull back. I bought at the wick low here around 65.50, and I'm just waiting to see if this will stabilize, make its way up. This is probably one of my favorite trades, to be honest. I know that my Aussie Swiss and my New Zealand Swiss, my dollar Swiss, some of those are performing better. But for the technicals on this one, getting back to 6,800 or 6,820, I think that's a very high probability. And ultimately, my profit target is up here with this pocket around 71 to 7,200. So I am long, and like I said, probably stubbornly long. And maybe this is a head and shoulders type trade, and we're just building the right shoulder. But eventually, I think we measure the move, and that's my profit target. So I'm going to stay bullish until we hit to that level, and I'll say it's good enough at 71. It'll be awesome at 71.50, and I'll be out of it with 100% of my trade at 72. So, and maybe I take all the profit at 71 if I get there. But I'm bullish on CAD Swiss. CAD Yen, all the yen crosses, no trades. Swiss Yen, no trade. Euro Aussie, just a bunch of chop. Euro CAD, this one I actually thought had a pretty good opportunity here. Euro CAD, this low, possibly head and shoulders in the mix. Left shoulder, head to neckline, right shoulder. If we do break down now, I don't necessarily need to participate in Euro CAD because I'm already long on the CAD Swiss. Those are inversely related. So if I just stick with my CAD Swiss long, I can get the benefit of positive swap and technicals going my way, and I don't have to play with the higher volatility of a Euro CAD. So I'll probably stay out of the Euro CAD and just focus that capital on the CAD Swiss. But if I'm correct on the CAD Swiss going up, then we should see the Euro CAD going down. Euro Pound, this was a sneaky little trade. There's still a gap right here, but I think that with the ECB cutting rates, the Bank of England has been pretty quiet, but I think they're also on that front where they might cut rates as well. But still, the slight difference, this has broken a multi-year low. I mean, we had lows here around 2023. This is June of 2023. So we've been about a year in this range, and it just kept like peppering that low, and then eventually it broke. So I think right now, as long as we stay postured, lower highs, lower lows, I'm looking for this to return back into some of these more attractive support zones. That could be as low as 82.50. So I'm focused on just draw a trend line. If it can't break a trend line, then just use that trend line as your resistance and focus on a sell zone on the Euro Pound. Now, this one's never exciting because that move I'm talking about a move that's maybe 150 pips. That's not something to get super excited about. I'm talking about a daily or weekly chart, and I'm looking at this wide open space for a whopping 150 pips. But if you don't know the exchange rate on the Euro Pound, a mini lot trades for about $1.40 instead of $1. So you get a slightly bigger, I guess, bang for your buck. But just be careful on that because it is a pound cross and the margins are a little bit higher on pound crosses. That's all. Okay. Euro Yen, anything here? Nah. Euro New Zealand. I'm going to watch Euro New Zealand closely just in case we want to maybe come back down to support. And this trade is going to chill for a little bit. So if we break that trend line, maybe we have a bottom that gets put in the interim, and we have a range. right? If we have support levels here and we hold that support, work our way back up, this could be a range trade. If it goes lower and stays on the left-hand side of the trend line, then obviously just look left and focus on, a sell trade. But I don't see anything outside of a range right now in Euro New Zealand, and I'll just looking to buy low if this level stabilizes. Euro dollar, just like the dollar index, it's kind of garbage. I mean, if you like a swing opportunity here, right? If you like a swing opportunity, if you took a stab at a euro dollar sell stop loss above, this structure did break. We had a break retest. So if I just draw this out first, we had a nice clean trendline break, retest. If this goes lower, we could see the euro dollar heading lower, right? Now, that direction would have to also prove that my dollar index wants to go higher. I don't see that yet, but if it does, don't be surprised if the dollar index gets above 105.60, that the euro dollar is heading back down here towards 106 or 105, possibly into these lows in the 104s. So it's mostly, I mean, the dollar basket is mostly weighted in euro anyway. So if you want to trade the dollar index, you can trade the euro dollar and just it's an inverse relationship. Dollar index goes up, euro dollar goes down. Make sense? All right. Pound crosses, pound Aussie. I was long in the pound Aussie. We've taken a couple stabs of this one for profit. I got out, early-ish. I got out like plus 30, plus 40. Traders saw this week on Monday. It was up about 150 pips. I think a lot of them at least move stop losses or take some profit. Pound CAD, we got in around 74. This ran up towards 76 and change. Grabbing some profit, protecting some profit. I'm still long pound Swiss, pound yen, pound New Zealand, nothing. Pound dollar, probably my least favorite. Super choppy, super messy. I will say this though, if I can get a better read on the dollar, you can see it's a pretty conflicting signal, right? You have this, this big swing high to low. You got to wonder if this is, if this is a major swing and we're going to go high, low, lower, low, and then set up for a bigger move on the dollar, or if this is a low to high, this is pulled back, and this is all the pullback you're going to get. And if the market's destination on the pound dollar is up here eventually, that this is setting up some type of bullish pattern. So I don't know yet, but again, watching the DXY, if the dollar is up, then this is going to fall. If the dollar is down, this is going to rally. I'm watching it closely, but I just don't have a directional vibe. I can't figure it out. So I'm not trading it. Okay. So I'm watching closely, but to me, this does look like we could be hammering out some type of bullish pattern. But I don't see the follow through until I can see the dollar index giving me more confirmation as well, which I don't have that yet. Okay. New Zealand pair, New Zealand CAD. As I said, love this trade, heading up to some nice highs. New Zealand Swiss, also love this trade, adding on dips and pullbacks. Target wise on this one, I mean, this is wishful thinking to get all the way to 67, but I'd be thrilled at 6,000. I've told traders that's my good enough target. If we get to 6,000, that's also this low, this high. That's right around a halfway point. Believe it or not, I mean, if you find a channel, if you do a technical analysis and you've got a channel, whether it's a bullish channel or a sideways channel or it's a bearish channel, I don't know if you use this, but there is oftentimes this invisible level of support and resistance in these halfway points. Okay. I mean, especially in Forex, this market can be very technically obedient. So, if we go from a support zone and you can buy low enough, a easy take profit is that halfway point. The full on take profit, you're trying to stretch that out. That's, letting your stop losses be breaking or better let your profits run. But man, there's a high probability to move a lot of those halfway points. Okay. So just throwing it out there. New Zealand yen, New Zealand dollar, garbage. Again, very choppy. It looks postured like we could have a bullish trade. It's just, the dollar index doesn't want to move. So there's my potential. And this is what's going to be interesting. We have a low, we have a high. It looks like we could see, some type of bullish pattern. But to get this bullish pattern to materialize and start to see that the bulls are supporting this, we've got to get back above this trend line and start making that push. So then I'd measure this move. We'd be somewhere up here around this bigger pocket. This is New Zealand dollar coming back to like 66 or 6,700. I hope it happens, but until then, this is just choppy. Dollar index, if it goes down, this is a really good trade. If dollar index breaks below 103.90, this is probably one of my favorite trades. Aussie dollar and New Zealand dollar have room to run. They have been the best performing pairs. When the dollar's weaker, we typically see New Zealand dollar or Aussie dollar going much, much higher. Or easy way to see that is if you pay attention to something like this every day, currency strength, you can see, yesterday, for example, this was 8:30 in the morning. So right when that CPI news broke, look at the currency strength. Get a big rip on the Aussie, big rip on the New Zealand dollar. What's the weakest? The dollar. So if the dollar index goes lower, most of the time we're starting to see those risk-on currencies like the Aussie, New Zealand be ahead of the game. So anyway, that's what currency strength can do, is just give you these relationships of, when one currency that's a big basket currency like the dollar, what tends to be the strongest mover against it when the dollar's weak. We've seen that a lot. Aussie, New Zealand do pretty well. Okay, and the dollar CAD. I'm long on dollar CAD, trying to get back to these range highs. If we get back to 38.50 or higher, I'm probably protecting most of my profit, but not there yet. Dollar Swiss. This one's, again, CAD Swiss, dollar Swiss, probably some of my favorite trades. I'm liking this area if I can buy low. I'm liking the right side of the trend line, but this is a head and shoulders pattern. So map it out, left shoulder, head to neckline, right shoulder, let it build. But a lot of these are kind of self-fulfilling patterns. I can measure that to symmetry. I can measure this from my low to high here. So my low to high here, if we break the neckline, I project that same measurement. So we're talking about this maybe getting back up towards 1.00, which is way up there. Okay, dollar yen, dollar peso. I've been reading about the peso. I feel like there's a Mexican ETF or Mexican stock market must be doing pretty well because the peso has been extremely weak. I don't know. I used to trade a lot of exotic crosses. I trade the peso, the krone, the South African rand. I even traded the Russian ruble back in the day. I traded the Turkish lira until it broke. I don't trade as much anymore. The margins have changed so much; they're really expensive. You pay a lot for, you're getting some volatility, but it's I don't get excited for a penny a pip and make 1,000 pips or make 5,000 pips. I mean, it's the same as just taking a leveraged major currency and making $100 or $200 or whatever. So anyway, I just was curious. I mean, I was reading about the Mexican stock market, whatever their ETF is. I'm sure they have something. Let's go gold and silver. Yep, sure. Gold, kind of the same song and dance for a while. I still like gold. Gold is selling off today a little bit. I mean, it's just red on the day, but it's not broken any major structure. I still think gold it's okay. I think it's resilient to look at some support levels to buy. As I'd mentioned last week, I mean, this could be a volatile window where it's just a broadening pattern and it makes it tricky where the bears might get sucked into a bear trap and then the market rips higher. But I think after, this pretty incredible run, it would make sense we're going to get a correction, right? If this, and so let's say this is wave 1, this is wave 2, this is wave 3, this is wave 4. Wave 4 is usually a pause. And if this is a wave 4 pause, wave 5 has not happened yet. And if we are correct in this, wave 5 gets us into highs that I would 100% want to be a part of. So I'm being patient because this level is interesting to buy, which I bought it. So GLD I bought it like 212. But anyway, I'm looking at this area, and the flip side of this is I'm not a seller on gold, but if this is a corrective pattern and this is a high to low and an equal high to equal low, if we break that and we go symmetrically that same movement to the downside, that brings all this potential structure, pivots, inefficiencies that gold has missed on the way up. It brings that all back into play. Or we might see this, push a little bit lower, test this trend line violently, and then flip back above, and we start to buy it from there. So if we have a decent dip to buy gold, I'm buying the dip on gold. If we have a range trade on gold, and this is a wave 4, then I'm looking for this to hold and look to see if gold can pick itself up, get back to the highs, and eventually, finish this 5th wave. The tough part about 5th wave is, and I'm not looking. You're listening to me talk about this. I'm versed in Elliott wave enough so that if I find obvious wave cycles, it's pretty straightforward. But you're not going to see me drawing like Roman numerals and capital and lowercase letters on my charts because I think it's super subjective. But if I can see a pretty simple wave structure 1, 2, 3, 4, right? Wave 5 is usually not this gangbuster ripper, right? Wave 5 is usually slow. Wave 5 is usually, it's like this melt up looking thing, and then a lot of times it capitulates. But once that's done, then we start to see an ABC correction. So, way, way, way higher, I'd be like way more bearish on gold, but that structure's not now. Right now, to me, this is a wave 4 waiting zone, and I'm just patiently, putting in some entries. Okay, that's my gold. I've talked about this for months now. I still think silver is a better looking trade. So Nick had shown this on his chart. I mean, that trend line is pretty solid. I will look to see if that trend line holds and offers some support. I'm looking that I might be getting a sign this month. I did some puts on SLV. I did a 29, 8, 7, and 6 sell puts. I might be taking on 1, 2, 3, 400 shares of SLV. My break even is going to be about 27.50, and I'm going to hang on to this because if I own, let's say I take all 400 shares. If I take 400 shares at 27.50 and I'm correct with getting it to my profit target at 32.70, let's do the math on that. Just conservative without selling calls or anything like that. 32.50 minus 27.50. I'd make $5 on 400 shares. Oops, you can do the math. $5 on 400 shares, I make $2,000. So I can make, for a lot of my accounts, probably about 1% on silver. But the nice thing is if I'm right with the ownership, okay, I can also decrease my cost basis with some out of the money covered calls. I can also increase my profit by adding some additional fuel to the fire. If I want to be long, I could also grab some futures contracts on silver to kind of juice the profit, add some alpha. And I could also, just trade some call options on SLV if we start to see more of a directional push. But if I'm doing call options, I'm probably doing something longer term. I'm probably going to go out maybe 90 days, 120 days. I might go out the full year and just buy a leap. In order to do that, I'm going to turn it into a diagonal where I will, buy the long month and I will sell the shorter months so I can lower the cost basis. Right. But I like silver and gold. It's just, right now being patient. They've had some good upside potential. I still think silver is playing catch up. I think silver is a better trade. That's my opinion, but that's where I'm at. Bitcoin, real quick. Bitcoin, pretty sideways. I mean, again, chart alarm here at 73.8 where the highs are. Chart alarm here at the lows. Nothing's really happening. I'm just going to wait and see how price plays out. This is Ethereum. Highs here, lows here. I'm trying to get some trades in 31.75 and 2,900 if those get filled. But that's it. I mean, otherwise, I'm just kind of waiting to see, how this plays out. If we have a Ethereum ETF, all the spot Ethereum ETFs approved, then maybe that helps this push it to higher highs. 48.80. That's the previous all-time highs. It's like 48.88. So if I can get some ownership in here or have some exposure, trying to trade this to 48.80, that's a pretty good chunk. But right now, it looks like we're just trying to make good on this little pocket candle where it was all bullish and nothing checked it. So a lot of times price pulls back to those efficiency spots. All righty. Happy to take some requests if interested. I just did pretty much the entire Forex market, did gold, silver, oil. I didn't talk about oil, but we talked about it this morning in my trading room. Oil it's a tough one. I mean, I'd rather be a buyer low. I'd rather be a seller high. The only spot I look at oil right now is if this is going to create a little bullish pattern, that maybe oil heads higher. That's about it. But I don't like trading stuff in the middle. If I have a stronger level of support, I have way more conviction to look to buy, at resistance, look to sell in the middle. It is tough to throw in stop losses at these middle spots, right? It's tough to know like where am I wrong, because price will test those levels, and the bulls and bears are fighting like crazy in all these like middle noisy zones. So just be careful. If you find some, you're not at a low to buy from or a high to sell from, you're sitting in the middle. Sometimes it's better just not trade, and it sucks if you really like the instrument, but believe me, you just wait. There's a better trade around the corner. I'm certainly more of a quality over quantity type trader. Okay, except for when I jump into a live session for FOMC yesterday and I waste. I didn't lose my $148. I lost about $70. But that was an annoying trade to watch FOMC do nothing yesterday. So one more thing we can chat about. I've got some levels today that I'm interested in watching. 540 to the downside could be hit, but I just don't see any major My gamma levels are kind of lighting up a little bit, but the sizes are just quite small. Up here, 545. So we'll see what happens. It looks like we filled today's PPI gap, but this level, watching carefully. I mean, if we break below 540, we could certainly have a directional type day. But something tells me that if price comes down to 540 and it bounces again, that might be an opportunity to look long on the day and get back to the highs. Could be. So maybe directionally today, I can look at something with the SPY. Maybe do. I mean, if I did a 0 DTE or I go out to tomorrow, I could possibly do like a bullish trade. But like I said, we've already stretched for the SPY. We've already stretched $12 for the week. I'm not saying that we can't go higher, but oftentimes on a weekly candle, we don't go too much higher than 11 or 12 bucks. So because we're there, I'm actually more interested in a short position. If we get higher, I should say, if we get higher, I'm interested in shorting that. In the interim, this is what I'm watching for today. This is Thursday, or today is Thursday. Sorry. So there's Thursday. This is Wednesday. So Wednesday is here. Thursday is here. Your Tuesday to Wednesday was that was your entire move. Your entire move was all pre-post market CPI data. Today, so far, not a lot's going on. That being said, what am I going to watch for? Well, if we breach these lows and we can convincingly close below these lows, I think we have a gap fill. But that would be today's high around 543 coming all the way back to 537. I mean, that's a $6 move. Are we going to get a $6 move today? I don't know. This market's been reluctant to move more than $3 or $4 while it's trading during live hours. So from 9:30 to 4, $3-4 is sometimes all you're going to get. Anyway, even here, I mean, this low to this high, that was about a $4 move. So I mean, the days right now when the volatility is super low, and when I say volatility, I mean look at the VIX. If the VIX is trading at 10 to 15, extremely low volatility. And we have had nothing exciting on the volatility side since this little peak up here in April, which we saw, 6 to 8% corrections in April. So it makes sense that a correction is what spiked up the volatility. But we're sitting here back at these, lows again. It's pretty dull out there, and it seems like this drift continues. So sometimes good trading is just waiting. Sometimes good trading is just doing nothing. And that's what I feel like I'm doing right now. So what I'll typically do on days like this, where if I don't really have a good directional play or something to do for the same day of trading, I just come into the portfolio, look at my days to expiration, have some trades to manage. I'm probably going to have some assignments coming. Not for a while, but I've got to watch some trades. So I have, let's see, June 21st that's a diagonal spread. So that one's not pressing, but out to July, I have a ratio spread that might be getting interesting. And on Adobe, this is earnings for tomorrow. I don't think that we had earnings yet on Adobe. So Adobe for the week, high around 70, low at 54. We're on $16. The average move for the week is 30, and I'm planning on right around a $30 move. I got into this trade. Let me see what my position is on Adobe. I did 2 credit spreads and I went deep in the money. I got filled for $7.36. So my risk is $2.64. That's my max risk. We have earnings. I think it's today after market. And we'll see what Adobe offers up. Earnings after market today. Good, bad, and different. I don't really care. I just want to see if Adobe can get us, one way or the other. Give me something good, give me something bad. I don't care. But if it goes far enough, I can take that 736 credit spread. And because it's, earnings after market and we have a expiration tomorrow, I think I did expiration tomorrow. Nope, I did next Friday. My bad. So either way, if I see my 736 credit is trading for like 636, $6, $5.50, I'm just trying to take, a percentage of that profit. I'm not going for the full thing. I'm not going to wait till next Friday on this trade. If it gives me a big move out of the gates, then I'll sit and let it do its thing. So that's for tomorrow. NVIDIA, I've got a ratio spread. I have a bunch of these are all changed because of the 10-for-1 split. So I had a bunch of broken wing butterflies that are looking great for profit into June. This will probably make me $200-300 per contract, or $2 to $3 per contract. SPX, I'm in this interesting spot right now with a, let's see here. Well, let me just take a look at it. So if I trade SPX out to June, this is actually pretty perfect right now. Yeah, I'll do NASDAQ. I'll do the indexes, sure. So I have a bear call spread right here, and I have a bull call spread right here. So this is a it's a fancier trade. It's called a call condor. All that means is I'm bullish above this, and I'm bearish below this. Now you might think of that as like, oh, that's an iron condor. No, because they're all the same side. So the P&L looks like this. On the call side, I collected credit on this trade, and this credit was around 45 cents. So I have credit on the trade. If you know what a risk analysis graph is with option trading, it looks like this. So this is my credit that I collected up front on the trade. Okay. This is my max profit. And this is my max loss. Right. So this is a negative dollar amount. And this is my max profit here. Now, right now, I'm sitting right in this window. All right. But because the expiration is out to the 21st, which is next Friday, I almost need to see price stay where it is and probably sit on this over the weekend to let more time decay happen and see where this trades at next week. But if I go into the positions here, I'm curious. I collected 40 cents. I go into 1, 2, 3, 4. If I want to close this right now, so my 40-cent credit is trading for $1.25. That's not good. That means I'm upside down about $100. Okay. Now, is that the end of the world if I just take a small loss? No, but my max risk is around $450. Okay. So what I'm curious of is if I just took, let me go back to positions here. If I take just the bull call spread, which is this one, and I close that, right now it should be a max of $5. It's trading for $3.45. So I mean, if price continues to go up here, okay, up here is not good because that's going to threaten my position. But if it stays where it is, I get the real value of this $5 trade. Okay. So I get $5 right there. And if it stays in between, I get the extra 40 cents on the net position for the actual credit spread. So my max profit is about 540. Well, I should say $5.45 per contract. If I have 2 trades in there, that's, roughly $1,000, just over $1,000. But it's got to stay where it is. So we'll find out. This will be a trade for next week, but I'll be watching. And the nice thing is this next week is not the end of the month. So, this end of the month expiration on the 28th is also a quarterly expiration. And sometimes that can be a little volatile and tricky where the market likes to push towards these big open interest levels. Let's go to the Qs. Okay. You're looking at the NASDAQ, looking at the Qs. Again, for the day, we're fading a little bit. This trade was profitable. I closed this out for like $11.80. That was a nice little gain. I'm up like close to $8 on the week per contract for my options trading. And I mean, it's funny, like the only real direction we had was friggin' Wednesday, and it was pre-market. So the nice thing is looks like the Qs are wanting to sell off a little bit. The SPY's trying to breach the lows. All this means to me, and this is important to watch. If it just comes to test, and it goes back up, then there's no trading. It's just it's a noisy Thursday. But if this becomes a directional day, and this actually goes to fill a gap, part of me is going to be happy with that, right? I mean, I want to be happy with that because like it'd be nice to know that I'm giving myself a little bit more room for next week's XPX trade, but also because it's just balancing. It's like every day when it's like we're here and then we gap higher and we do nothing, and then we gap higher, we do nothing, we gap higher, we do nothing. I freaking hate that. If I want to buy something, like give me a dip to buy. So anyway. Zen's asking dollar Swiss. We did. You want to look at dollar Swiss? I'm long. That's my stance on it. But just look for a big fib swing and a head and shoulders trade. If you want to watch this session or watch the recording, I've got it on my channel. I know the A1 trading team has it on their channel as well. But I did an entire Forex run from A to Z earlier in the session. If I go back to the Qs for a second, let me go to the Qs. Okay, this is intraday. So my 9:30 to 10:30 Qs. We gapped higher, obviously on PPI, come back down. I'm interested. Do we Do we break today's low? And if we do we come back into yesterday's low? This is a long ways away from filling a gap, but if we just chop around for the day, that's not a typical Thursday. Usually Thursdays are fairly directional. And so I'm kind of hoping we have a bit more direction to the downside. Looking at some levels getting filled up here. The 540 handle lights up a little bit on the SPY. I guess I'll keep this really simple, right? SPY, if I get a break below today's, it's 10:25, so we have another five minutes. But if we break yesterday's low, oftentimes the day is going to finish red. So if we break yesterday's low, chances are we finish red. And is that enough to push more direction and get bearish to the gap yesterday? Maybe. So there could be an intraday trade here. But like I said, if it just hits the same low as yesterday and bounces back up, then you're just dealing with more chop. And you look at this price and it's, hey, here was Monday, nothing happened. Here's Tuesday, a little bit happened in the afternoon. Here's Wednesday, all your direction was put in on Wednesday, and then Thursday, garbage, and then Friday, who knows? But I would imagine Friday is going to be pretty quiet as well. Right? So pick your battles, be patient, show some discipline. It helps. But this is what I'm going to watch today short term. All right. Qs overall, we're crazy overextended. Let me go to this chart here. And then I see Jimmy's asking about Tesla. I'm going to go to the Qs. So if you want to go NDX is going to be your futures index. So, I would, you know what? Let me look at this for tomorrow. NDX. Let me look at this right here. What would be a level? First off, how many points are we supposed to move on the week? We're supposed to move about 578 points on the week, and I believe we hit that, possibly surpassed it. Look at that. That weekly candle is ridiculous. Let's see. Low of, I'm going to have to do some special math here. So roughly, we've had a 688 point move on the week for an average of 584. We've moved over 100 points higher than average. That's what I'm saying. Like, this market for the week has kind of done what it's capable of doing and a little bit more. And I could see that being something I'd be willing to fade. Now, if I go to the NDX here on the smaller time frame, I want to see, maybe I can put in a bear call spread for tomorrow, right? And, is it going to pay me anything? I don't know. Probably not. Let's see what the implied volatility is. 8.2. It's probably no volatility whatsoever. But let's find out. If I do something today, I probably have to go right above price, and that would be, I'd have to be a bold trader and say it's not going to go above, 650. So if it did 19,650, I still don't get any freaking money for it. 19,650. This is for today. Wow. So 19,650. Sell that, buy that. That's going right above today's high. I can get $1.20, but I'm taking a freaking, $1,000 risk on the trade. So I make my credit, but I'm risking $800. No thanks. Even though this should be, out of the way and out of the expected move, but the last thing I want to do is have a, $900 risk for a $100 reward. So I'm probably not going to take that trade. But what I can do is, can I make $1 and move this up a little bit higher? Look at how much that changes. So right there, I can go $10, make $1.15, give myself a little bit more breathing room. That's an 85% chance of profit that we won't go above 19,660. 19,660 is just above the high. It's like, if price just does a normal day, and a normal day is 220 points. In a normal day, that's crazy, right? The 14-day the 14 period moving average for the trading range per day is 220 points. If if this goes up to what I say that the strikes were, 660, it's only going to have to move up like 100 points. It can easily it can easily test that level, and that's way too much risk on that trade. So anyway, that's for today. If I went out to tomorrow, I'm more, I mean, that's a decent amount of credit to collect, but that's a lot of risk. Let me go to tomorrow. So I'll delete this. And then for tomorrow, um, wow. I mean, I could probably throw something way out there for tomorrow, but I mean, the expected move is 210 points. If I try to go to like a 10 delta, maybe I can get something for this. But man, look at that risk. That's a 25. That's $25 strikes. That's just sucky. Yeah, yippee skippy. I make $1.95. But if I'm wrong and this thing wants to rip higher tomorrow, I'm going to risk 2,300 bucks on a bear call spread. That is a lot to be guessing. But a lot of that is because the IV is so low that I'm just not getting the premiums that I want. If I'm willing to go $25 for risk, I would want to collect about 25 to 30% of that. So if I have $250 in risk, or yeah, $2,500 in risk, I'd like to get about, let's say, 30% of that width. I should be able to make $750 or get $7.50 credit on the trade. If I'm willing to take the trade, that to me is a little bit more tolerable. But this is an awful trade as far as reward to risk. So, and that's doing everything right. I mean, that's going to a very low delta. The probability is extremely high. This trade is fine. 19,800 pushes us up even higher for the week. That would put us up. We're already up, 688. That would put us up another 688 and another 170. I mean, you're talking about an $840, $850 week, but it's possible. So I don't know. I'm just thinking that risk is a little crazy. So I will wait. I will wait. I will wait. That's not always fun, but I will wait. So I suppose the next trade could be, I'd be willing to take a stab at this. Instead of doing a bear call spread, I could do a broken wing butterfly. There'd be more risk to find. Let me do a call butterfly spread. Watch this. Let's go to tomorrow. Let's go to 19.8. So I'm going to go past the expected move. And if I sell that 19.8 and I skip this strike, now this is a little bit more manageable because I have a window for max profit. Everybody see this? So I have max profit around $2,500, but in order to get max profit, price has to come all the way up to that level and hit it. Okay. So if I really, really, really wanted this trade, then I should sell this. I mean, that's a pretty good level to put it. That's a high percentage of profit. I could probably grab my 50, 60 cents and be happy with that. But again, I really only want to take this trade if it's going to move up to like $1 or $2. And realistically, I'm probably going to do this instead. If we're at 8, 9, oh man, I don't think this is going to be the case, but I'll put in a pending order at, man, this is way out of the way, but let me move these all down. I'm going to put a sell at 20,000. So now we're talking, comparable risk, comparable reward. This trade, I'm not going to take the trade at 10 cents, obviously. I'm going to try to take this trade at, if I can get filled on this for like $1, I'll take the trade. Okay, so I'm going to put in a pending order right here. And this means that my trade from today, tomorrow, 20,000, we'd have to move another 450 points, which I doubt that's going to fill. And I doubt that, I'm going after a 98% chance of profit, but is 8cap a broker? Absolutely, 8cap's a broker. 8cap's a great broker. So anyway, I'll place the trade. I'm going to put it in for $1. It'll be good for tomorrow. This is a Friday expiration. If price gravitates higher, this may get filled at $1. I'm giving myself a broken wing butterfly opportunity to make, if it peaks out and hits 20,000, I can make 2,500 bucks near the end of the day. If it stays shy of it, I'll just keep my dollar credit. So I'm going to throw this trade in right now, and then I think I'll start wrapping up the session here. If you have any other questions, I do want to do Tesla. Who's asking me earlier? Jimmy's asking about Tesla. I'll do some Tesla. Let's go like another maybe 7 to 10 minutes. And if you have any requests or any charts that we haven't talked about yet, then I'll run through those really quickly. But I'm going to get these trades placed pending order for $1 and see if this is good. And again, this trade will probably not fill. But if that's the case, it's done, and it doesn't get filled by tomorrow. So let me go in here. Just going in for $1. Let's go review. Actually, I should be able to get. So if I'm doing what's $1 out of a $25 risk? That seems insane. So $1 out of I'm making 4% of the width. I mean, come on, dude. I got to get at least 10 to 15% of the width. So 0.10 times 25. I'm gonna go after 250. Which even then, it's gonna be rare that I get filled on the trade, but at least give me something. So anyway, wishful thinking. It's out there. It probably won't get filled, but it gives me something. If I get it, probability is that trade is going to be a high probability of profit. If I can make $250 on it, that's cool. If I can max it out at $2,500 or $2,750, that's even better. But anyway, that's going to be the trade. So good till canceled, which means it ends tomorrow. I still have my Adobe trade in to manage tomorrow and next week. So I'm going to go 250 here and pending order. Okay, and then everyone's going to get some of this action. So that is that account. That account. And then we'll go to Tesla and any other requests that we haven't discussed yet. And also, while you're at it, look what look at what A1 Trading Trader Nick's posting in the chat. Free Edge Fighter thanks to 8cap. I mean, that's a huge bonus. You're saving, $13, $15, $2,000 signing up and funding your account with 8cap, getting a free Edge Finder for as long as you have that account. That is a huge value. And also, 8cap is a great broker. I mean, if you've ever watched, I mean, Nick and myself and a lot of good friends of ours in the industry participate in the trading battles. That is sponsored and powered by 8cap. So a great broker out there for a lot of traders, with also tons of partnerships in the industry as well. So not only, 8cap's a great broker, but obviously you see the promos. I mean, they're running a 25% special on the Edge Finder. So best thing about the Edge Finder is not just all the tools and resources and the trade ideas and the top setups and all the data that it pulls in and scrapes every single day, but the fact that it's a one-time payment is crazy. That's awesome. So, if interested, obviously check it out. And I think there's some steps where if you just send a direct message to the A1 Trading team, you'll actually talk to a real person. You can get a trial on the Edge Finder or just get it for reals. But a one-time purchase is a lot better than everyone and their mother and brother and sister want a subscription model, right? So is what it is. There you go. Send a direct message here. You see it highlighted. All right. What trade did I leave off on? 8051 pending. 9111 pending. Okay, so I need to do this account here. This one. So for tomorrow, similar order. And 7634. There it is. 9151. There it is. And final account right there. Perfect. So that is that. I could probably do that same trade that I just took and place that also for a Monday expiration as well, which I think I may do that and try. I'm going to try to do the exact same trade, but for Monday as well. That'd be Monday the 17th. And do the same call butterfly spread. Move all the strikes down towards 20,000. It's going to be a $25 width, but try to get 250 on it. So sell the 20,000, tighten that up, and then skip the strike. So it's worth 28 cents now, but same type of thing. If I go after $2.50, pending order, and again, neither one of these, they might not fill, but it's a super high probability of profit with a bit of a lottery play if I'm right on that strike price. Let's find out. So let's go back down, start this process over. Lee is asking about uranium. Yep, still in uranium. We'll take a look at that. I want to look at Tesla and URA and some of those other uranium plays. Yep, still in it. Okay, so right there, pending for the 17th. Similar, 9732. Pending. 8051. Pending. Uh, 7634. And there we go. All right. So trying to get in for a broken wing butterfly on the NDX and it's way up here. So B, it's a broken wing butterfly, calls, and I'm trying to do a -2 at 20,000, 250 credit pending. And this is for a 6/14 and 6/17 expiration. So we will see. But other than that, price is pretty contained for the day. It's, I guess the market just, it kind of got all of its excitement and energy out from Wednesday, and now it's just a little exhausted. But we'll see if there's more in it. Okay, Tesla and URA, and then we'll wrap it up. So Tesla, on the weekly chart, Tesla's had a rough week. I do have a trade running on Tesla. It is a ratio spread. All that means is I'm interested in that. I'm trading Tiziana Life Sciences, not Tesla. Okay, a little bit different. Tesla's still down for the day, up for the week. But the trade that I have on Tesla, I just look at this stock and I'm thinking, this is what I love about Tesla. If we have a head and shoulders trade, this would be an excellent way to get long. Let this thing just correct, let it do its thing. Two ways I'm looking at this trade. To me, I'm really interested in buying it at the lows. So if we have equal lows, that should be right around $100 or so. Let me check that price. But if we have a double bottom here, that would be I think a pretty fantastic spot to be long. That low is around 101. So I'm looking for a chance to get long with some ownership around $100. Okay. We could also start to see that this may head higher. But to me, the easy trade on Tesla is this. We start breaking these highs with some momentum. That's the trade that I'm looking at. Getting back to the highs. This is a bullish head and shoulders trade. There's your left shoulder. There's your head to neck line. This is all correcting on the right shoulder. So either this is a, breakout trade for this neckline, okay? Or this is a correction phase that comes back down to equal lows, and we look to buy low. We look to buy low. And look, this might be like a larger rounded bottom where it stays here and chops around. But eventually, when it catches some steam, maybe it's just waiting for this bigger trend line, right? Let's just say this. Let's say that we just chop around here for a while, and we just round out this long area. But if it breaks this trend line eventually, who wouldn't want to be in a Tesla trade from $150 to $400? I would. I think pretty much everybody would if you knew it was a good trade. So I mean, that's why I'm patient, is maybe looking to see if it just comes back and gives me a spot that I want to be on. Okay. But what I did on Tesla is I've got a ratio spread, and it looks like this. Let's go into Tesla. So I went out to the end of this year. Okay. And what I have on is it's a 115. It's basically a naked put at 115, but then I have a long put at 130. So what this allows me to do is I can take this trade two ways. So I have the 115 naked put, and I'm willing to own Tesla at 115. But I don't just want to own it at 115 and collect oh cool, I got, $1 out of that trade. Well, I mean, if I make $1, great. But what I'm doing instead is I put on a 130 long put. This will provide a $15 credit if price falls far enough below 115 for me to be assigned. So if I'm assigned the shares at 115, I have a long put at 130. So what happens is I'm assigned at 115, okay? And then on the trade itself, I took the trade for $1.22 credit on the ratio spread. And then I'm getting a potential $15 credit on a bear put spread. So I could own, my break even on Tesla would be 115 minus $16.22. You can do the math on that. I own the shares less than $100, right? That was my whole plan, is if I want to own Tesla, I want to own it at $100 or less. So 115 minus 116.22, I own it. 115 minus one. Actually, I'll just do 116.22. What am I doing? 115 minus 1622. There. I own the shares at 98.78. Okay, so equals 98.78 ownership. So if you look at the chart, would you like to own Tesla at 98.78? I would, and I'm willing to. So that's the trade. And if I don't get assigned the trade and it doesn't go down to 115, then I don't own the shares at all, and I just make 122 bucks, or at least 122 per contract. Okay. So that's my outlook on Tesla. I do like the stock overall. I don't think that Tesla is going to be a big mover based on being a car company. I really don't. I think Tesla is going to be more of a battery company, a technology company, freaking Skynet company. Maybe Tesla become, I don't know. Elon Musk is a little wild with his, I mean, you look at his days with, SpaceX and buying Twitter and what he did with, was it PayPal? Was he in PayPal back in the day that he cashed out on? Anyway, if Tesla becomes like this open patent energy company, then I think there's great stuff ahead, but I think it has to incorporate not just cars. I don't think this is a car company. If this is a technology company and a disruptor and an innovator, then maybe that's where, the golden path lies. But structure wise, I would like to buy it as low as possible. Yeah, PayPal. Yeah, co-founders, I thought. Okay. Uranium for Lee, URA. We're back down to 30 bucks. I'm still long on uranium. I am long a couple different ways. I've got some naked puts here, like low 20s. And I think I might have one even higher than that. Let me go URA. So I have a 20, 19, 18, and I have a long call at 22 out to January. So I'm putting in some pretty decent buying power on some naked puts. I wouldn't mind taking 1,000 shares. But I again, doubtful I'm going to get assigned if we dropped another, we'd have to drop 33% on uranium for that to be the play. So I don't think I'm going to get assigned, but if I am, I'll take the shares and run with it. But other than that, I'm just looking at a long call that I'm going to turn into a diagonal. I paid $9.59. I mean, I'm at a break even about $9.40. So that puts me up around $31 as a break even on my call. It's a diagonal spread. I haven't put anything against it yet, but my goal with this trade is symmetrically. If uranium can get up to 40, this is URA. If it gets to 41.50, then I take a 21, or I guess it'd be $22 plus 9.40, give or take my break even. Get it called away at 41.50. I make $10 a contract. I'm in 200 shares. I think I make $2,000 on uranium if it's 2 contracts. Yep. So I'm 2 contracts long. So I make $2,000, as well as making another $1.60 on 10 contracts. So I'd make, trying to think here, it'd be another $1,600. So I could make about $3,000, $3,600 without taking any assignment at all. It's not bad. But longer term, I think uranium is a decent play. There's a lot going on here with maybe this rotation into nuclear energy once again, or clean nuclear energy. Hopefully it doesn't come back to bite us in the butt, but I think that's a clean way versus coal, an alternative energy source that seems like there's a little bit more of a willingness to get behind it. Let's see here. Tesla ratio spread. How many DTE'd you do? I started off with like a 15 delta on that, and I went out to December. So I went out quite a ways because I wanted to try to get at least $1 for it. So I don't remember exactly what the delta, or I'm sorry, the day extraction ratio was when I took the trade, but right now it's out 190 days. So I went out to December. I want to keep it within this year, but I went out probably, it would have been close to like 200 days. I just went out. I looked at it this way: end of the year. If I'm selling, time works on my side, works in my favor. So I went out a long ways, but time is working in my favor. Some decent theta decay on that one, and yeah, it probably started off with the 115 strike would have been a 15 delta, probably a 15 or 10 delta, and I still was able to grab $1 credit, which I'm happy with. And then if I get assigned, I own it where I want, and I'll take the 100 shares, own it at 98. That's only going to tie up 10 grand cash or 45 or $5,000 margin. And I mean, the good thing is this is an easy stock to repair. I could probably grab $3, $4, $5 on a covered call every 30 to 45 days. So I could lower my cost basis to next to nothing, or I could flip this thing pretty easily for, $5 or $10 a share. Yep. So, all right, we did Tesla, we did URA, we did a lot of other stuff too. So it's been fun. I think I'm going to wrap it up there. I've got an equity design man class coming up in 10 minutes, so I'll take a little breather. Before I go, I'm getting all close to the camera. Before I go, and just on behalf of Nick and the team at A1 Trading, thanks again for having me. It's been a fun week. A lot of excitement. It was nice to be profitable going into yesterday's morning, and then yesterday's afternoon was, you're waiting for some excitement, but the market doesn't really deliver. And even today, market's doing more of the same. I think the market is lacking catalyst right now. I mean, earnings season is kind of drying up right now. This is one of the last weeks for earnings until we get into end of the quarter. So once we start July, August again, earnings season fires back up, and we'll have a whole nother round through the summer trading, which we'll see. We'll see if it's high volatility, low volatility. But the Fed is going to keep you guessing. The Fed's going to be super, super tight on their language. And I think that, Fed wise, dollar wise, index wise, interest rate wise, it's probably not going to be too exciting until post Jackson Hole, maybe into September. And this either is going to be more of a melt up or just expect some chop. So get your hands on the Edge Finder. It's a great tool. Open up an account with 8cap. It's a great broker. If you want to follow me out there on social media, I'm out there. Best place to find me is right here, joining with the A1 Trading team. Find me at Market Traders. Find me on my YouTube channel, youtube.com/Chris Pulver. I also have a Discord channel if you'd like to join. If you find me in a live session, just leave me a comment. If you're watching on my channel or here, you can leave a comment. But it's easy to find me. So just happy to help. Hope it's good information. Cool. All right, buddy. Take care. Have a good day, and we'll see you soon. Thanks.